Hi, welcome to Simple Steps to Trading YouTube channel. This channel is about options trading, and we do share option strategies which will give you very minimum loss and limited profit. And please do subscribe our channel for more videos. Thank you. Hi, in this video I'm going to explain how did I able to manage when the market went against me, or other way, when I traded against the market. Okay, so this is on April 4 of 2020. Okay, so this is the nifty 15 minutes chart. You could see the market opened around 10,933, and it went to a high of 11,100. Okay, so this was purely a bullish market, but unfortunately I predicted the market is turning to be bearish by 10 o'clock. The first thing I thought was I was looking at was the moving average, the blue line. The moving average was around 10,033, 933. So I expecting the market to come back to that level. So that's why I chose uh, 11,000 put option and 10,950 put option. I chose both the strike price. Okay, so what I did is I bought 11,000 put option and I sold 10,950 put option. Okay, so when I did that, when I took this trade, the put option of 11,000 strike price was at 95 rupees, and similarly the 10,950 put option was around 75 something. So the spread was around 23 rupees when I took the trade, and I was expecting to increase the spread to increase by 30 or 35. Okay, so that I can make a minimum or limited profit. But unfortunately, by 10:30, the market crossed or broke the resistance level 11,020, and it made the day's high around 11,040. Okay, so uh, once this happened, I came to know, I realized I did a mistake. Okay, so I thought the market is going against me, or I took a trade against the market. So I did not lose patience, and what I did is that's something that options gives us the power of options. Okay, so I was waiting for a right opportunity to know to do the adjustment trade, not a firefighting but a small adjustment. Okay, so as you see, by 12 o'clock nifty hit another day high of 11,066. So what I did at that time, the 10,950 put option was around 40 rupees, which gave me a 3,500 rupees profit. So what I did is I exited from 10,950 put option, and I was still holding the 11,000 buy put option buy, and what I did is immediately I sold 11,050 put option. Okay, so as you see, the market still went up. So the 11,050 put option gave me a 30 rupees profit, and this 10,950 put option sell was gave me a 30 rupees profit. Okay, the 11,000 buy which I bought for 95 rupees went to a day low of around 35 rupees, which again gave me a 60 rupees loss. So which I was able to compensate with the selling which I did for 11,050 put option and 10,950 put option. Okay, so this is how I was able to manage my loss for the day. Okay, so this is something that you can do only in options. Options gives you power to do an adjustment trade, even when you go against, or you did a mistake, or you went traded against the market. Okay, so that's why I prefer options. I suggest everyone to know, learn options trading, where you have a lot of benefits like very less tax and no less brokerage, and where you can simply do an adjustment trade when there is a disaster, or the market reverses against us or goes against us. Okay. Thank you so much. If you have any doubts, please mention that in the comment. Thank you. Thanks for watching our video. Please do like, share and subscribe our channel. Thank you.